Peter McGuire, CEO of XM Australia, sitting in Sydney. We saw a departure over the last few days, Peter, between equity markets and oil, which were kind of moving in tandem, seem to have divorced over the last few trading sessions, with oil prices clearly softening, whereas equities keep hitting the records.
Good morning, everyone, and team. Yes, I would have thought that, Sean. And when I'm looking at those numbers coming out as far as Dow, S&P, and Nasdaq bid up 3% overnight, and Dow and S&P between nearly 2% and 2.4% respectively. So very, very strong. And I was expecting that wash, Sean, to continue across Asia trade today, and it certainly hasn't. Where we've got China down the best part of 1.5%. So maybe the crude market coming back and that China softness are going hand in hand. Brent still 63, NYMEX 60, so they're still above that magic number. Probably a little bit exhausted, profit taking. US dollars, Sean, since Thursday, and I look at that US dollar index as a matter of 25 times a day. 89.6, 89.7 Thursday evening here, now 91.2. So that really is a big push to the upside.
Why do you think is driving that? Inevitably, typically that's a flight to safety indicator, is it?
Yeah, I think it was possibly overdone as far as a sell. So the shorts getting squeezed first. Secondly, those bond yields, Sean, that really took everyone very much by surprise, and that big washout that we experienced naturally on Friday with equities. So it's a time of, I think, consolidation, push back above, and maybe that US dollar just having a little bit of a field day as far as big volatility swings. Gold's been also heavily sold off, and really, I don't think the crude markets have moved that greatly over that matter of days.
Peter, should we take some longer-term confidence with the copper price continuing to rocket, punch through $9,000 last week, highest since 2011? What do we interpret from that?
Well, Sean, it's been a great time to be long copper and a lot of those base metals, iron ore as well. So yes, I think it's just coming back to, and you've got to say that it's been worked off the back of crude. That's had such an enormous rally since October. It's all been swept up. Industrial demand improving, general consensus as far as economies coming back to speed, and 21 may mirror image to some ways, or the second half of it, what 19 was, coronavirus, vaccines. And I feel as though that things were certainly very oversold, and that rebound is just enjoyment for traders, the same as what we experienced in crude. If you didn't make $1 out of crude from the end of October till the start of March, then you might as well give the game away. So that's the same in as far as copper, still off that $12,000 highs that we've had as far as longer back. And it's still cheap in today's terms, Sean. It's, $9,000 a metric ton is still ridiculously cheap. So is crude oil, if you put your mind back.
In what context?
Well, if you put your mind back to July 08, where we had 147 for crude, 13 weeks later, we went to 33 bucks.
Peter, we saw again yesterday the S&P have its strongest day for over 6 months, with the bond markets appearing to calm down a little bit. Are we through this bond wobble, or is there more nervousness to be had there, do you think?
I think there's more nervousness, Sean. I think the uncertainty, the inflation story, all of those inputs, the volatility that we've seen as far as US dollar sell off for most of the other currencies. And whilst we did have that very strong move, and it was no doubt, very, very over the top, 3% up, got to remember that we had a 4% wipeout on Friday for the Nikkei, and we had a very solid sell-off as far as US equities on that Friday. So they're all, I think it represents one thing and one thing only: volatility and that nervousness that we can see those big whipsaws. Put your mind back, you get 3 and 4% swings in a day. For short-term traders, it can be a delight, but longer-term holders, it really puts a sense of nervousness out there.
Uh, what's your thoughts on the 1.9 trillion stimulus? I mean, last week it was supported by the House of Representatives, now in
Sure.
the Senate. Is that baked into the market at this point? I mean, it was finally delivered and the market sells off. I'm trying to understand, is the 1.9 trillion stimulus something in the rearview mirror rather than ahead of us from a
Well,
market's point of view?
I think it's for the recipients, it's ahead of them, and
Of
for the
course.
government and for and for the government and for the market, Sean, I think it's already been baked in. It's behind them. So that feel good news story is already there. It's just contributing, and we can't get away from the numbers that we're experiencing as far as those record Dow numbers and S&P. So and Nasdaq, of course. So the earnings are there. The storyline is very much the same as far as, is this the last time you'll see stimulus to the general public of America, or are we going to have another round, say, May, June? And that's out there somewhere, bubbling away to and until we probably get over the next 8 weeks to get a clear indication of what the status quo is.